Okay. Well, let's now shift gears and connect with Aisha VECV. The company, of course, had its July auto sale numbers, managed to beat expectations. And guess what? The VECV July sales were obviously up compared to the corresponding period, but also on a month-on-month basis. So let's decode what exactly aided the company. We have Vinod Aggarwal, the MD and CEO of Aisha VECV, joining us on the show. Mr. Aggarwal, thank you so much for joining us today. Big jump in July versus June. Was this sort of the continuation of perhaps pent-up demand that spilled into the month of July as well? Because I'm assuming, of course, April and May, you had tough times due to the second wave and the lockdown. So was that the key trigger for the rise in sales in July?
Absolutely. I think the pent-up demand is definitely there. And as we had mentioned earlier in the last interaction, July onwards, I had mentioned that the situation is going to improve, and it is in line with that expectation. And every month is better than the previous month, and that's what we expect going forward, because the economy is going to pick up. The only uncertainty is about the wave 3, and hopefully, I think with more and more vaccinations, we should not get that. But if you leave aside that, I think the economy will do well, and the CV industry, in fact, will have the best time, because CV industry had been in a lot of, you can say, it was declining for last more than 2 years, and this was quite a long period. And going forward, you are going to see better days for the industry, and in line with that, VECV will also do well. And as you can see, our month of July was almost double than the month of June. And of course, previous year figures are not comparable, because first 4 months were absolute lockdown in the entire country last year. So we are very positive going forward for the CV industry as well as for the company.
Mr. Aggarwal, you're present in buses, public transportation, you're present in the heavy-duty trucks, you're present in the LCV segment as well. How was growth in all of these segments? If you could break that down for us.
If you look at the heavy-duty trucks, I think the growth is continuing very well, led by the growth in the construction trucks. And but then if you look at still the overall numbers for the month, even heavy duty trucks, the numbers were only 10,000 in the month of July. This is for the industry. Now 10,000 is much lower if you look at the earlier peak numbers, like for example in some of the months of 2018-19, the numbers were as high as 30,000. So we are still at, you can say, 1/3 of the earlier peak of heavy duty trucks. Similarly, if you look at the 5 to 15 ton or 5 to 16 ton, which is light and medium duty trucks, there again the last month numbers are 7,000. And if you look at the earlier peaks, they were 15,000. So still we are much away from the earlier peak numbers of the entire industry. As far as the bus industry is concerned, it is still continuing to be highly depressed, because the schools are continuing to be closed. There is very less movement for the staff, because still work from home is continuing. Intercity movement is still less, tourists are less, so tourist coaches are also standing idle. So therefore, I would say the bus industry continues to be the worst impacted. Going forward, I think we will see some slow recovery happening in the bus industry, because we see some of the schools have started opening. And in Delhi also, I have, someone was telling me that some schools have started opening for some classes. So therefore, I think more and more confidence will start coming in. We will see the schools opening. We will see the more persons, more people attending the offices. There will be more intercity movement. So therefore, the bus industry going forward, I think, should start recovering. As far as the truck industry is concerned, the truck industry is going to continue to recover. Of course, I think still there is a lot of, you can say, pain with the transporters, because fuel prices have gone up significantly and freight rates have not gone up in line with that. As a result of that, the transporters are still having, you can say, very, very bad economics. And especially the small transporters, the people who operate with 1 or 2 trucks with them, I think they are the worst impacted. as far as the fleet operators or big transporters are concerned, they still have the contractual prices linked to the fuel hikes. But the small transporters, they have to stand in the open market or the transport nagars or the places where they get the daily haulage requirements. Now, those are the people who are worst impacted with this fuel hike, and the freight rates have to go up, and they will start going up once the economy starts picking up more. Because when the economy picks up, there will be more demand for movement of goods, and that is the time when you will see the freight rates going up more and transporters coming back to their economics. And as a result of that, there is more and more focus on highly productive trucks. That is why I think there will be more replacements. All the old trucks will need to be replaced because they are, first of all, they are technologically very, very low. And at the same time, overall cost of ownership of the old trucks is very high, and as compared to the modern trucks. So therefore, there will be more focus on technology, more focus on productivity. For example, from VECV, we are selling 100% of the vehicles now as connected trucks. So they are all with live, very advanced telematics connection. So therefore, I would say there will be more focus on productivity, more replacements. And then, of course, with the economy picking up, there will be more demand for movement of goods, and the CV industry has bright future.
Sure. Vinod, just wanted to understand, how is it that you are tackling with commodity price inflation, given that it's still elevated? Suffice to say that you would be undertaking more price hikes to try and protect your margins?
Yes, we are trying to do that. But as I mentioned, the transporters' current condition is not so good. So therefore, there is too much negotiation, too much haggling on the price. And as a result of that, and since the overall numbers are still less in the industry, so there is a lot of competition. So therefore, I think the discounts are continuing to be high. And we are trying to make the price increases. We have made already some price increase in first quarter of this year. We have made another price increase this month. But I think these price increases are becoming insufficient in view of continuing increase in the steel prices as well as other inflation. And at the same time, also discounts are continuing to remain unabated. So as a result of that, overall pricing, overall margins, they continue to remain under very high pressure. Like, for example, the steel prices.
Interesting.
It went up by 30% last year from October to March. And on top of that, further increase has happened from the first quarter. So steel prices are continuing to increase. There was some respite last month when we saw some drop in the retail prices of spot prices of steel. But again, this month, these spot prices have gone up again.
Yeah. That's a bit of a tricky situation, isn't it? The other thing I wanted to talk about, Vinod, was also, large industry peers of yours like Tata Motors, Maruti have all sounded off warnings about the chip shortage. How is it that you're coping with the situation? And given the restricted supply, is it being able to meet your demand requirements?
We are able to meet the demand, but the situation continues to be tense. Because there is continuing shortage of microprocessors, ECUs, and more electronic parts. However, we are trying to cope up with our efficient supply chain management, but the situation is hand to mouth. The situation is very, very difficult. So that is true, and everyone is facing that problem. And let's hope that the situation gets resolved. But I still see that it will take some more time in resolution of this problem.
Mr. Aggarwal, how much of your order book, how much of your sales is exports? How has that portion done in these last few months, especially, of course, as Indian demand has only now started to come back, like you said, in the last one odd month. And of course, I'm sure it'll continue to do well. But in the meantime, have you sort of tried to make up by increasing your attention and focus to exports?
Yes, exports continue to be very, very important segment of our overall sales. And we export currently around 15% of our total sales are outside the country. And we see better traction happening in the new markets. Like, for example, we are getting better numbers from African markets. we have started exports to Southeast Asian markets, for example, Indonesia or Malaysia. And we have started exporting to some of the developed markets of Africa, for example, South Africa. Or we have started exporting more to Middle East. However, the India-like markets of Bangladesh or Nepal, they are continuing to behave like India, and there are still some, the pressure on the industry due to the lockdowns and the this corona pandemic. However, the situation is better in some of the other countries like Africa or you can say some of the Southeast Asian or Middle East countries. But of course, the Bangladesh and Nepal and Sri Lanka are still much lower than their earlier peak numbers.
Your case.
Okay. Vinod, great to have you on the show. Thank you so much for so candidly explaining all the parameters and the dynamics in the industry, and especially for you at VECV.
Thank you. Thank you very much.